Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon and welcome to the AICPA Town Hall Series. I'm Eric Auskerson, one of your hosts for today. We've got a great power hour in store for you. We're going to be hitting all of the key pillars of the town hall. We're going to start off discussing some, breaking news from Washington, D.C. and also, the state of the economy. And then we're going to have a great discussion with two firm leaders on their view on firm strategy and adding capabilities to drive growth and in a great culture. So here are the presenters for today. I'm going to kick things off with Barry and Lisa with the DC and profession and technical updates. And then I look forward to introducing you to these two firm CEOs shortly. So Barry, it's great to be with you. Lisa, great to be with you here in person. And we just concluded a major firm group meeting, and that's why we have these two large firm CEOs with us, and we'll all be together. So Barry, it's the summer of 2023. We can look back to where things were a year ago. We can look back to where things were 2 weeks ago in our last town hall, where we were getting some encouraging news. They just released the CPI number, which was 3% 2 weeks ago. We talked to Gene Marks about that. And we've got some more good news. We just heard about the second quarter GDP at 2.4%. We also heard Chairman Powell's remarks. And also everyone's reading about the general consensus now that it's looking less likely that we're going to have a recession. So how are you kind of seeing all of this news? And it's encouraging. I mean, last summer, I was saying, go back to summer of 22, we had a 9% CPI.
There's no question that has changed a lot. And Chairman Powell certainly was cautious. I mean, he still left the window open as far as additional rate increases, but he was also pretty direct in saying that he did not certainly think of a massive recession or a significant recession. And I think that does bode well. There's still issues as it relates certainly to small business. We've talked about some of that in previous meetings. The interest rates affects access to capital. You still have some pressures on costs that are coming from supply chain for small businesses that create some difficulties on the gross margin level. We certainly still have, some impacts of international and some of the political issues that are going on, war and things of that nature. And so it's not a bed of roses, but it certainly feels a lot better than a couple of quarters ago. Yeah.
I mean, you hear from people like Jamie Dimon, many, many months ago, a major storm was brewing. Now it's looking better and better. But we have been talking to a lot of the firms as well as some of our partners about, what's going on with the cost of capital, access to capital. And, a recent discussion I got some input where they stated that, the new rules the Fed's putting in place for the banks related to their deposits, that's going to impact a number of the banks which have more than 100 billion in assets. The big four, the top four banks in the nation should be okay. But this is also going to continue to create a slightly tight environment for the small businesses.
No question that is an issue, particularly when you get, like you said, below the largest four banks. But and obviously access to capital, those community banks, all of those things are important. We can't underestimate the impact of even a quarter rate. There are some impacts there. The real estate industry and the real estate market, if you will, certainly is impacted by any kind of rate fluctuation. There's a lot of KPIs in those calculations for home buying. We certainly have the commercial real estate is certainly still got some uncertainty as relates to what kind of office configurations people need in a post-COVID world. And, a lot of debate certainly in big cities about how much supply and demand is really there, what happens with those properties. So that's not a perfect thing. And, I think we have to think about interest rates too, sort of in our national consciousness. Interest rates go up. The cost of the U.S.'s capital is going up every time that happens as well, right? We are a major borrower. The predictions now, if spending continues the way it is and interest rates continue the way it is, by 2028, that, the service on our national debt will exceed defense spending by 2028.
Wow.
That feels like tomorrow. And then, if you just continue to plot out our national debt, by 2032, it's estimated that based on interest rates and forecasts for interest rates, a debt service amount of about $1.4 trillion just on the debt service. Those are huge numbers. And, when we were sitting in a situation where inflation was exceeding interest rates, there was actually some paying down of debt because there was some paying down debt with cheaper dollars. Well, now that's reversed, and so it works against the federal government from that standpoint. So there are structural issues in our national debt that interest rates are really problematic.
Well, I mean, this is all going to come to a head. We've been talking a lot about it, this potential government shutdown. And I think we got a couple other topics that we're going to cover now, but those pressures, Barry, that you just talked about are clearly going to be, top of mind as they move into the September, October 1st deadline. No
question. So basically, tomorrow, Congress goes home and is basically out of Washington for August. So there's no legislative dates there. We have the September 30th date. They come back in September. There's a limited number of days in September. And there's a very significant impasse on the appropriations bills, some of the debt extension things that kick in automatically by the end of the calendar year. And there's not a lot of evidence that there is a path to avoiding a government shutdown at the end of September. And they could do a continuing resolution. They've certainly done that in the past to buy a little bit of time. And that's certainly one of the paths that might happen. But I think if you just look at the sort of the divisive nature of our government today and the politics associated with it, some of the debt issues that I just talked about, I think it feels like, the challenges of small majorities in the House and the Senate, it feels like the pulling effect of spending cuts, funding the government is going to really be problematic as we get into this cycle.
Well, let's move on to some other kind of updates from Washington, D.C.
I've been hearing a lot about Shark Week the last few weeks. I feel like this has been ERC week. Every day, something new's coming out on ERC. And this one just came out yesterday. It was a statement from Commissioner Werfel at an IRS National Tax Forum. And I just thought this was really interesting. We have put the entire information release in your resources. Download that and make sure you keep a copy of that because it's really insightful. So basically what he's saying in this quote that I thought was really relevant is the IRS is recognizing and calling out the impact that these aggressive ERC marketers are having on our tax professionals and on the IRS. So just a good quote there. A terrible scenario unfolding. His concern, as he goes on to state in the information release, is that well-meaning taxpayers could get caught up in some of this aggressive marketing.
I think that, first off, I think the statement by Commissioner Werfel, kudos to him. I mean, I guess some of you, and maybe all of us would agree, that would have been great to have it 6 months ago or whatever. But he also went on to say that the further away from COVID that these claims in, the IRS views them maybe more suspect. I don't think he used that word, but that was the essence of it. And so it's the right message to send. And I think the well-meaning taxpayers are, they don't really understand some of the circumstances there is a major risk to the uninformed, frankly. And we know CPA firms have felt that with their clients. I would say it this way too, Lisa. We talked about PPP, and there was a lot of discussion about PPP and where there was fraud, et cetera. And we know when sort of all of that has come out, those companies whose PPP process was done through CPA firms, much smaller incident of problems, et cetera. And, I think maybe in a year from now, if we're having this discussion again, the earned income credit, the ERTC, is the issue is going to probably show where CPAs have been involved. The incident of problems is probably going to be a lot less as well.
Yeah. And to continue with the ERC update, I now have a new official favorite acronym. the IRS issued a general legal advice memorandum, otherwise known as a GLAM. So I'm going to try to work that into all of my updates from now on. And I didn't know what a GLAM was, so I'm going to read you a little bit about it. It is an internal IRS legal document issued to assist IRS personnel in administering their programs by providing authoritative legal opinions on certain matters. They are for internal use, but they are made public. So taxpayers are not supposed to formally rely on GLAM, but it does give us a look at the IRS's position on determination of whether an employer meets full or partial suspension of the business test due to supply chain disruption. Supply chain disruption has been a huge topic in a lot of ERC conversations. So what constitutes a supply chain disruption that lets an employer qualify for ERC? So in that GLAM, and you've got a live link to it in the slides, you'll be able to look at the different scenarios that the IRS gave and look at how they reached a decision as to whether or not it would be a legitimate supply chain disruption that would allow for the claim.
With that new acronym, I'm not sure of the numbers. That may put us over 100,000 acronyms in our profession.
It might
right?
be, but that one's my favorite. Right now, as we speak, there is a House Ways and Means Subcommittee hearing on ERC. And so if you see me looking at my phone, we're getting live updates from one of our advocacy team who's paying attention to that. And it looks like so far it's primarily focused on, on fraud. And we were thinking that there might be some updates on the delays in the processing of ERC, and I've got some news on that as well. AICPA has submitted written testimony for the record in those hearings, basically suggesting that there is a need for continued oversight. Also continuing with the ERC week, this one actually goes on into the month of August. We are presenting on IRS nationwide tax forums. Our AICPA DC advocacy team is presenting on those, and we've given you a link if you want to register. We're talking primarily about things like, the backlog and frauds and audits, but also what constitutes a legitimate claim. A lot of ERC news. So I pulled out a couple more quotes from that information release that's in your resources. And this basically starts with saying, there is a new phase of employee retention credit work at the IRS. They've gotten their backlog down, and they've given us a number of, a total of 2.5 million claims filed so far. Commissioner Werfel indicated that they've gotten the backlog down so that 99% of the ones they are less than 3 months old. So they're really working on processing them. But if you take a look at this next quote, Commissioner Werfel says that they're working with Treasury and Congress to look for solutions to help with this fraud, including potentially putting an earlier end date for businesses to claim the credit and increased oversight of the return preparers. So I think everyone is again put on notice that this is an issue that the IRS is focused on. This is an issue that we're seeing in the hearing that's going on as we speak. They're bringing this up, so we'll continue to hear more about it, I'm sure. Last town hall, Melanie Lauritsen joined us to do a great overview of a topic called Beneficial Ownership Information Reporting, or BOI, not my favorite acronym. And so just as a reminder, this is an anti-money laundering reporting system that goes into effect January 1. And if you're an existing company, you'll file your first report by the end of 2024. But if a new organization is created or there's a change in ownership, then there's only 30 days to file. This is estimated to impact millions and millions of small businesses, primarily small businesses. And if you did not catch the segment, or if you want a reminder about it, we've given you a direct link to that segment of last town hall, and then also a link to the resources that we have that include both client-facing information that you can provide to your clients to get them ready for this requirement, and then to help you and your teams get up to speed on what all is involved. So again, keep that on your radar. We do have an advocacy update, Barry, that I think you were going to talk about.
Yeah, something like potentially 32 million filings in 2024 if there is not a delay in the requirements. And FinCEN could delay that. FinCEN is a function of the Department of Treasury. And they could go through rulemaking. They've passed one rule you see on the slide. There's two more to be addressed, but they could also delay. Now, there is a piece of legislation called Protecting the Small Business Information Act. So contrary to the money laundering type of notion, in this case, slowing down the thing is really what the legislation is intended to do. Chairman McHenry of a subcommittee of the Financial Services Committee had hearings on this, and in a discussion, he indicated the need for passage of legislation. Now, we all know, and we've talked about this in town halls before, the passage of legislation is certainly, you can never say it's certain. Only like 5% of all bills introduced ever get passed. So I don't think practitioners should take that to say there will be an extension. That's really the purpose of the bill, is to extend it by a year. The passage of this is certainly, less than 50-50, but it is building momentum. It has bipartisan support of, maybe it's too quick and we need to move back the effective date. I think our advice to practitioners would be, you still should take this as an opportunity to inform your clients, to get them sort of geared up, that there will be some reporting for all those LLCs, et cetera, that flow through tax returns, where, they're really small entities, small number of employees or no employees, that will have, and 25% ownership, greater than 25% ownership reporting. I would say it's still a great opportunity to educate your clients. If it gets extended, we certainly will be on the top of that. We're advocating for that. We support the legislation. We'll give you some information to support it as well as they come back into the September timeframe. But the reality is that I think you still have to take the steps to inform your clients.
And we've given you a copy of that advocacy letter in the resources as well, just so you can see how we're continuing to push for the delay. We're getting some questions about generally what size entity is subject to this. And it is, again, small businesses, typically with revenues under 5 million. There are exceptions. If I remember correctly, there are about 23 exceptions to who has to file. Most nonprofits wouldn't have to file. Any regulated business wouldn't need to file. And this only applies to entities who have registered with the state. So, for example, a sole proprietor that's running a Schedule C and hasn't filed with the state as an LLC or anything like that would not be subject to it. But there are still tons of small businesses that will fall under this rule.
Right. The LLC that owns a rental property that's on your individual client's tax return has got a filing requirement if this goes effective.
Yeah.
And Lisa, the questions are coming in fast and furious. I think this is one that will continue to, provide more information around and more resources around if it becomes, truly a hard requirement.
Yeah.
So.
And again, the Resource Center has good information for both your clients and internally. So take a look at that.
And by the time we get out of the summer recess, we'll have a better idea as to whether this legislation has potential.
Yeah.
Just another topic, the Section 529 savings plans, the ability to use that for paying for CPA exam fees and prep courses, and not only in the CPA profession, but in others, is a bill that is pending. We are major supporters of that. Just in the last month, we've gone from 20 co-sponsors of this legislation to 50, and it is bipartisan. It's almost 50-50 Republicans and Democrats co-sponsoring this piece of legislation. And just like some of the other legislation, like we were talking about on the small business reporting on the beneficial ownership, we're going to give you some information as we get into August and September about how you can be part of this process and, correspond and give the right information to members of Congress. It's not the right time to do it. They're going to go back home, but we're going to ramp that up as they come back.
Absolutely. All right, so moving into, that was a lot of technical updates, but let's hit just a couple more. There was an announcement this week that the IRS was ending most of its surprise revenue officer visits. And I thought the timing of this was interesting. Just a couple of weeks ago, I got an email from a member whose client had received one of these unannounced visits, and they were really concerned that it was a scam. So that's one of the reasons that the IRS has made this decision, because it could absolutely create an opportunity for a scam artist to knock on the door and say, hey, you owe the IRS $100,000, give me $5,000 and we'll settle. And the IRS is also worried about safety concerns of their employees. So most unannounced revenue officer visits will be suspended, but there will still be a few. Hopefully your clients will never be in a situation where they have $110,000 or more in debt and are having the IRS come knocking on the door. But I think hopefully that will alleviate some fears. And if you remember last year, April Walker from our tax practice and ethics team was hosting some Reimagining Your Tax Practice roundtables. They were on some really interesting topics last year. Those are archived and you can still grab those, but she's launching that series again with some tax practitioners who are in the trenches with you. And they're going to talk about how to expand advisory work, approaches to different business models, more good topics. I got an email from one of our town hall attendees who had watched that series last year and said she learned more about running her practice watching this series than she had in 40 years of actually running the practice. That's pretty powerful testimony, and hopefully you'll spend some time either signing up for those new sessions or going back and watching the archives. We've got a link there for you to visit the whole library of those. And with that, we will introduce our practitioner guests.
Well, thank you, Lisa. It's my pleasure to introduce Avni Desai, who's the CEO of Shellman. Shellman is a very interesting firm. They're a top 100 firm. I think, Avni, revenue over $100 million. And you focus just on doing cybersecurity work, in particular, SOC 1 and SOC 2 engagements and other cybersecurity activities. So welcome, maybe share a little bit more about your firm.
Well, thanks for having me here. So you're right, we are a top 100 firm. I think we hit 49 this year, so that was really exciting. And most of our revenue comes from certifications, attestations, and assessments related around cybersecurity and privacy. So you're right, the SOC 1 and SOC 2 is the majority of it. And then, other services like PCI, ISO, FedRAMP, pen testing.
So no tax work, no accounting services work.
No advisory, none. Yeah.
Highly focused. Well, welcome. John Sensiba, great to have you with us, the managing partner of Sensiba, a top 100 firm in the Bay Area. Maybe share a little bit more about your firm.
Oh, thanks, Eric. It's nice to be here and to sit next to Avni. I've enjoyed getting to know her a little bit. We are like 99, I think. So we're in the top one. We just crawled over the bar. There was enough M&A activity that allowed us to move up. We'll be about 80 million in revenue this year, about 400 people. We only have physical offices on the West Coast, but we do have people in I think 34 states. So as the diaspora happened during the pandemic, that was a hiring opportunity for us. We are a more traditional CPA firm, audit, tax, consulting. We do some similar services, cyber services that Avni's firm does, and we're very focused on verticals, I think, as most firms are, being in California, primarily the San Francisco Bay Area, where we were founded. A lot of venture capital, a lot of technology, manufacturing, which is what Silicon Valley was before it became Silicon Valley. We still do a lot of that in our consulting practice, some software installations, those kind of things.
Well, welcome. Well, what we're going to talk a little bit about is firm transformation. And Avni just led this major firm group meeting. She was the chair of the meeting. And there was a great panel discussion with the firms related to, driving culture, driving growth, thinking about how to lead in today's world. So why don't you just reflect on some of the things that were discussed over the past couple of days?
Yeah, sure. Well, it's really exciting to kind of bring my world into the major firms group. So a few of the areas that we talked about was, how do we focus on resilience by bringing in emerging technologies to all of our firms? And I think that's really important, because if you take a look at what we typically do, like if I look at day-to-day what my associates and senior associates are doing, it's a very manual process, right? And we keep on talking about increasing the pipeline, getting more people excited about our profession. And one of the ways that we also talked about productivity, with our economists this week, I think one of the ways to do that is how do we complement what we do by integrating technology into it? Like, I'm not looking to say, hey, technology is going to come in and take over all of our jobs, but I want technology to come in and say, I'm going to give you a better employee experience by taking away all of that stuff that you don't like doing, like cutting and pasting and going from one software to another software. And I want to be able to do all of that, cut the friction, and give you a better experience. And one of the best ways to do that, and one of the fastest ways to do that, is incorporating some type of emerging technology into the mix.
Well, I'm going to come back to you. We're going to give some practical examples to the town hall community shortly related to some activities you're doing with ChatGPT. John, you think a lot about leadership. You think about, how you're going to leverage technology and also how you're going to engage your employees.
Yeah, and I agree with Avni. Getting rid of low value clerical work. As a profession, I think we've thought about that and then realized it was a lot of work, and so we outsourced that low value clerical work. We offshored it to lower cost labor markets and avoided the digital transformation that now is being forced upon us, which I'm thrilled with, because we have really smart people that we've turned into clerks in some cases. We're charging prices that the market will no longer pay. So using technology to make the profession more attractive, to be able to provide higher value to our clients is. And I think I shared yesterday that I wish I was 30 years old, because the future of our profession over the next 10 or 20 years is going to be so exciting. And our focus is on reducing friction on the employee journey, letting them do their jobs as opposed to clicking and cutting and pasting, and reducing friction for our clients. So a lot of the things that Avni's firm is doing that help internally, they also help externally. It's easy to do business with Chase Bank. If you've got the app on your phone, it used to be incredibly painful to do all the things that necessary to keep data secure. They've figured out how to make it easy. As a profession, we need to figure out how to make it easy so that when the marketplace has a choice about using us and the trust place that we've always had in society, or using somebody else to do some of the things that are happening with ESG and other things, we want to make sure that they use us, and we need to make it easier for them to use us.
Well, I look forward to coming back with you with some specific examples of some of the techniques that you're putting in place to really engage your employees and make that better client experience. So, but first, Avni, let's talk about some of the steps you're taking with the capabilities of ChatGPT to, drive, more efficiencies and also to do unique things in kind of how you provide services.
Yeah, sure. So ChatGPT and AI has become such a buzzword. And so if you think about it, that technology has been here for a while. Machine learning. I mean, that's been something that for a decade we've been thinking about. But what ChatGPT has done is allowed organizations our size and smaller to be able to harness that technology, which took OpenAI and other like Google decades and decades to build, but allows us to take that type of technology and be able to customize it to provide services or provide something that we want to be for our individuals to be more efficient. So what we're doing is we first put together an AI strategy, which I think is really important. Any firm, any size needs to have an AI strategy, and that should be step one. So even if you're thinking about, okay, this is going to be 2024, maybe even 2025, sit down and decide what you want to do with AI. And so that's what we did. And we're risk averse. I mean, we have client information, we have confidential information, and we wanted to make sure that we were still staying ahead of the technology curve, but at the same time, we wanted to mitigate that risk. So we put it together 3 proof of concepts. So we have a chatbot named Shelly, after Shellman. So it's Ask Shelly. And the first one was a very easy proof of concept. When I talk to our people experience team, they tell me often that they get emails, dozens of emails a day asking questions about our code of conduct or our handbook, about PTO policies or onboarding questions. And sometimes our people experience team wouldn't be able to get that get to it until the weekend or at the end of the day. And so our employees were waiting for that information. So what we decided was we have all that information somewhere, right? We've written it, it's in a policy, it's in a procedure. So we opened what we call a private server of ChatGPT. So it's not going out to the into the entire world. And we put all of that information in there. So emails from maybe your chief people officer or updates to benefits all went in there and was tagged. And so now we have a proof of concept where you can ask Shelley questions like, you know, I'm going out on paternal leave. How many weeks do I get? You know, how many more days of PTO do I have? When does PTO expire? And that has cut. So it has taken the burden off our people experience team, but then at the same time, it has given our employees a better experience. And we all know we like immediate gratification, right? You don't want to wait 12 hours, 16 hours, 18 hours to get a response from an email. Well, they get that response immediately, and it's accurate because it's timely, because we know the information that we put into that server is the right information.
Well, I mean, a couple months ago, we had our opening overview about generative AI, you know, ChatGPT being the primary example. And I think what you just described is, you know, exactly what we were discussing is maybe the first use cases would be, and it's these practice management solutions.
Correct.
And John, I want you to comment a little bit on what Avni just said, but what you didn't take a lot of resources. I know we've got a lot of small firms on the town hall session today. And the way you're going to do this is you're going to use the solution providers. But even what was done by Shellman here wasn't that complex. This was you had a couple people that, you know, said, okay, we have the data set. We're going to put ChatGPT looking at the data set and drive more efficiencies.
Correct.
So John, when you heard this story yesterday and reflected on it, and I know you're thinking about how you want to drive this type of technology and innovation at your firm. Maybe share some of your comments.
Sure. I shared yesterday that innovation is kind of an intimidating word for me. It seems like it's got to be this huge thing. But really any kind of improvement is innovation, and I'm stealing that already. What a great idea. Yeah. I mean, and talk about reducing friction and enhancing the employee journey. So we're now employing that idea to provide the same thing for folks. We have an internal knowledge base. We use a product called Nuclino. Mm-hmm. And you can go in and it's, you know, you search and it's a little bit clunky and maybe it's not that great, but to be able to respond with what most of the generations that are coming into public accounting, they expect that. Mm-hmm. And how can you not have that? It's so easy to do. I think Avni shared that it was like $18,000 that she invested to get this done. I mean, almost any firm could afford that. And if you can't afford it or you don't have the internal resources, I think you can acquire that, right? You can make that happen. And it's going to be table stakes. It won't be like, wow, that's really cool. We'll never do something like that. We can't, as leaders, we can't think that way because we've got to be able to compete and give people the experience that they want and be able to attract people into the profession. I love the term glam because now we can say that there's some glamorous things about about the public accounting profession, but we do need to make it more attractive.
I want to bring Barry and Lisa into this discussion. So if you've got questions or comments, please add to them. But when you think about this use case, just looking at all of the internal information you have, and that it's a great way to, you know, lower risk, have your employees leverage this to answer questions. But then the next step, and we talked about this a couple months ago, is if you wanted to assist you to write engagement letters. You've got 100 engagement letters, you know, for restaurants or whatever it may be. This is exactly the technique that you'll utilize. You'll use a system like ChatGPT to look at that information and help build that initial engagement letter, which then you'll do some additional customization on. And we're going to be having a meeting with a number of the technology providers in September, and we're going to be hearing about the innovations that they're going to be providing to their products. So this is going to come out very fast and furious, where you're going to see a lot of augmentations to the practice management systems, to the accounting systems, to the tax systems. And it brings back to the point you just made when you opened. It's an exciting time to be doing what you're doing because these technologies are going to get rid of the clerical work.
Well, just to build on that, I'm going to give both of you a tough question. So maybe it's tough. So just imagine, and I'm sensitive to Eric, you said it, the small firms that participate in the town halls. So just imagine for a second, knowing what you've been through and how you've done it with your firms, which is fantastic. You're a small firm practitioner, so let's just give you a hypothetical. You two owner firm, 6 total people, less than $5 million in revenue. What advice would you give them? Because even an $18,000 charge might be difficult. And so, what advice? Where do they start? I mean, Eric is a big proponent, which I agree with. It's about the application providers, but even that, how do you get your arms around it? Any thoughts from that standpoint?
Yeah, I think that AI strategy is really important because you're right. The strategy is going to be different for every single firm, right? So the strategy for our firm might be, well, we have a lot of new hires coming in and I need those questions answered and maybe not enough people on our people team. Maybe a Big Four has a strategy focusing on, we're going to use this to actually test controls. But a 2-person firm, well, they potentially can use this maybe, answering questions on the web. If someone comes and they're specialized, you can overlay ChatGPT on the tax code, right? There's a lot of things that you can do, but I think it starts with the AI strategy. What do you want to do this year? What do you want to do next year? And what's your future plan going to look like? And once you come up with that, then the resources. So, the resources we used was we went up to GitHub, which is open source, and we said, well, we're interested in finding something that is already pre-made that we can just tweak and set it over and that's free, right? Where we had to have money that we were spending was someone coming in and helping us chunk all our data up, right? That was really where the cost came in. But my advice to everyone is just go out and play with it. ChatGPT, don't put any client information or confidential information in there, but you should go out and play with it and ask questions about, auditing standards and tax, and it will pull that information in for you. It might be from 2021 because that's where the data set has come in from for ChatGPT, but just learning it is a really good first step for any type of firm.
And I've got some questions coming in.
You jump in, but just for the searching the standards, and then test it to make sure it's accurate, because we know ChatGPT is not 100% accurate.
But just and this is a great question for you, that people say, okay, are you checking the SOC reports on all the vendors that you're utilizing is one. But the question here, just to explain, you're not using the ChatGPT public offering, you're doing it on the private system. And then just a little bit, just quickly on what external resources did you bring in? And was that this 18,000 just for this project on the HR platform, or was it for all 3 of your initiatives?
It's the first step for the proof of concept.
On this HR Shelley system.
Correct, yeah.
And just a little bit on the data, your thoughts on even this, that it's your internal information, but your concerns of keeping that confidential and how you did that, and maybe explain a little bit about the difference from private to public.
Sure.
ChatGPT.
Sure. So there's now, you could get a private instance. Certain cloud providers have it as part of their package. Other cloud providers, it's not part of the package, so you have to do a little bit more, technical work. But you can go out and you can spin up any private cloud, and once you put information into that private cloud and then you overlay ChatGPT over it, that becomes the private instance of ChatGPT. Because what I didn't want to overlay all of our information over ChatGPT, because what's happening with ChatGPT, it's pulling information from its database, right? Which is, tens of years of information and books and so forth. I wanted it just to pull from my information.
Your HR data.
Just my HR data. Yeah. And the reason I wanted to do that was, 1, it's accurate data, and 2, we're building this proof of concept for the future. And the future, I may put information in there that I don't want outside. This HR data, I was okay if it was going to get leaked, and that's why it was so low risk for me to use. But that's what we're building, is how can we build a secure data set that only internal resources can use.
Okay.
So let's ask John, let's see what the small firm answer is.
Sure. Yeah. Well, I remember when I was responsible for HR, I installed our first Novell network. There's a lot to do.
That's an old word.
Well, I'm an old guy, Mary. Thank you for pointing that out.
I am too, because I remembered it. So.
But this stuff can just make your head spin. And Avni led off with, have a strategy. related to AI. And even that is like, what? I don't even know where to start, right? Our firm strategy right now is no ChatGPT. Until we figure out how we're going to do it securely, that's the only strategy we have. Don't do it, right? Don't use it. So I think for smaller firms, over the last couple of days, I've talked to a lot of larger firms like Avni's firm. We have an incredibly collaborative profession. People aren't going to hand you the secret sauce, but they're going to help you. If you're not networking with other professionals, you're missing an opportunity. And you can do that doing your continuing education at like the G400 meetings or other AICPA or state society events, and just breathe. You're not gonna be irrelevant in 12 months if you don't have a very elaborate AI strategy. There will be opportunities for you to buy this stuff. It'll be on the marketplace. It is so hard when you're focused on all those other things as a small practitioner. It can really be overwhelming. So I would say, relax. For security purposes, don't allow it. And it will come. It'll all be clarified in 12 months. Right now, it's a very confusing space.
Can I just add to one thing about breathing? I think that's a great statement.
Breathing's important, Barry.
It's important. But one of the firms, and this is a larger firm, but I think this is applicable to a smaller firm. They set aside X amount of time. They do it each week, but you could do it each month to visit with one of these application vendors that you don't know anything about, to come in or do a virtual meeting with you for an hour and just listen with an open mind what's out there and then see if it's applicable to your situation. That investment of a little bit of time, maybe you just do it not in tax season or whatever, but you can learn what's the opportunity from that standpoint.
Yeah, and I also think you should take advantage of your newer team members. There's a lot of people that are just curious. And they're dying to take the lead on it. It's a great opportunity for a young leader to do something within the context of security and all the things you do.
And the questions coming in are stating that a lot of people are doing what Avni's doing, just using it not for client data, but using it more for practice management. So right now, and maybe your strategy of no ChatGPT could evolve in the coming months.
Without a doubt, it will. We serve literally thousands of venture capital clients.
Right.
And somebody wants to know who wrote a memo on fill in the blank, some very technical issue. Why recreate the wheel?
Right.
We have a knowledge base, but it's super clunky. Layering ChatGPT over that, training it with that data, anonymized, of course, but training it with that data, the impact for our people at their busiest time of year could be incredible.
Well, maybe one more example that you've done for your sales folks related to ChatGPT. It's kind of a knowledge source, just like John mentioned.
Yeah, sure. Same thing, knowledge source. And that's what, if you think about any of these generative AIs, wherever you have lots of data that you feel confident and factual data, that's really where you want to start thinking about your AI strategy. And so we write, you go on our blog and we have 10 to 12 technical blogs that our associates, senior associates, and managers write a week. And they're really good knowledge. We put them out on our blog, we put them on social media, but it's very hard to find them. Like if someone's looking for something, it's very difficult to find them. You can search the web. But one thing that we also noticed was, when calls came in from potential clients, it would go to our group of business developers and they might ask a technical question like, the new version of PCI 4.0 came out. Can you tell me the difference between that and 3.0? But what would happen is our business development team would have to set up a meeting with our subject matter expert. But we just wrote a blog about it, 4 months ago. So we could tell the prospect, oh, go read the blog, or we could lay over Shelley, again, over that great content, that rich content that gets bigger and bigger every week. And we could ask that question to Shelley, and then our business development team will have an opportunity to answer that really immediately. So cutting down that, again, friction from can you wait another 12 hours to have a conversation with our busy professional, or here's the answer. And so we're cutting down our sales cycle, freeing up some more time for our technical SMEs to do their day-to-day. And then also really, the other thing is we're empowering, our business developers with this data. And that's really exciting for them to have that ability to be empowered to do such a technical job because they have the information.
Lisa, what's BCPS thinking about all this?
Yeah, from my perspective, I would, if I were in a firm that maybe doesn't have all of the people that your firms have. If I were in a smaller firm, I'd be thinking about where is the friction, where is the recurring question asked, and where's the recurring pain point asked, and then figure out what the way forward with, whether it's ChatGPT or some other approach to reduce that friction, which I think comes back to your point and yours. It's about the experience in reducing friction. So don't think this is just something that only large firms can do. Start identifying what the pain points are. Your administrative team is going to know what they are. Your staff people are going to know what they are, and then build that into the artificial intelligence strategy or the technology strategy in general. And then I loved the idea of bringing in a tech vendor. It may not be once a week, but it could be once a quarter. That's what I do with our team, just to make sure that we're exposed to what's going on in the marketplace. Because again, I think for so many firms, the technology vendors are going to upskill us very quickly.
They're going to lead. I mean, the wave is just, it's building, and the solutions are going to start coming out towards the end of this year. And then I think these examples, though, are just going to help you think through, the how, and the how probably makes sense to start with practice management and then to move towards client-facing activities. Well, let's just shift gears a little bit here, because it's not just all about technology. It's about, culture and leadership. So, John, I know there's a number of things that you've put in place at Sensiba to kind of, bring the best out in your employees and just really make their experience more powerful and probably a lot more productive for the firm.
You're making it sound very strategic. I wish it was, but some of it was accidental. A number of years ago, we became a B Corp. We were there's probably a dozen or more now in the country, CPA firms that are actually B Corps. And we became the first one in California, really to try and see whether we believe that the profession behaves in a very appropriate way towards our communities, towards our other stakeholders. Said, how close are we to this standard? Didn't know if, and still don't know if that will be the ultimate standard for businesses. Will it be beta or VHS? Who knows? But B Corp is a pretty well accepted standard. So we put ourselves through that process. We crawled over the bar, 80.8 points. You have to have at least 80 on the scale to get there. And we're much higher now. We were recertified just last year. But the impact that had was pretty incredible. When we had that on our recruiting information, there were students walking past the Big Four, which obviously catches most students, and coming to talk to us about what a B Corp is. When I first suggested that we do it, some of my partners, the audit partners, said, well, is that like an S Corp or what's a B Corp?
And I'll tell you right now, we've got 10 questions here. What is a B Corp? What is a B Corp?
Yeah.
What is a B Corp? So please define it.
I will, and I'll keep it simple. You can go to Google B Labs. That's the international nonprofit that certifies B Corps. But a B Corp is essentially people that are using business as a force for good. Yeah. So you're paying attention to more than, it's a shift from shareholder value, which is what our country's been focused on for 100 years or maybe longer, right? To value for all stakeholders. So if you're doing something and you're polluting the water, part of my youth was spent in Niagara Falls, New York, near Love Canal. The Hooker Chemical Company made a lot of money, but there was a huge environmental and human cost to the dumping of waste. So it's a recognition that you've got a responsibility beyond making partners rich, right? And providing opportunity to your people. There's a greater responsibility. And when I first brought it up, maybe 5 or 6 years ago, in one of the managing partner groups I'm in, they kind of looked at each other like, that guy from California again, Good Lord. But this last year when we got together, suddenly everybody was interested in the Center for Sustainability that we have at our firm. And as we talked about earlier today, there'll be regulatory requirements and it'll come through the supply chain to every practitioner's practice, but really the marketplace is demanding this. Not only is the marketplace demanding it, but employees are demanding it. And our retention, and we went from 190 folks at the beginning of the pandemic to a little over 400 now. Part of that is because we're a purpose-driven business, and it's not all tree hugging and the kind of things, rainbows and unicorns that people think about sometimes with California. It really is about doing the right thing, and it feels good. And if you don't believe in climate change, I don't know how you don't, but if you don't, I can't argue that. I'm not a scientist. I do believe in clean water and clean air, and I think everybody can get behind that. So if we're just focused on that and we behave appropriately, then I think we can get a lot more people on board.
Well, in the follow-up newsletter, there are a lot of questions. We could give a little bit more information, maybe even that website. But the other thing that you're doing a lot of is, just coaching and, focusing on employee enjoyment at work. Maybe talk a little bit about your coaching strategy.
Sure. Well, I mentioned earlier that we have a very collaborative profession. So this is an innovation that I stole from another firm. And when I talked to my partners about it, it was like a very big aha moment, but also a little embarrassment that we have always talked about how important our people are. And yet we promote people, CPAs, to whatever level they are when they now become performance managers. We give them a little training, but we expect them to now be responsible for our most important asset, our other people. And you trust that to somebody who may not have a desire to do it. They may not be very good at it, but by the nature of their promotion, they now suddenly become magically prepared to do this. So we've hired, I think we've got 5 full-time licensed coaches. Our program starts on August 1st. Tuesday morning before I came down to the conference, I met with them physically because they're all over the country. And I got to tell you, I spent an hour with them. It felt like 5 minutes. And I was sharing with Barry earlier that, my confidence to competence ratio sometimes gets way out of whack. And I was too afraid to be vulnerable early in my career and to really get mentored and get coaching. I see what it's done for others, and it crushes me that I was too dumb to do it. But we have a very simple value set at our firm. One of our values is the golden rule. So I wish somebody had done it for me in my career. My partners wish the same. So we're now doing it for everybody in the firm, including executives. We will have professional coaches. It does wonderful things. It lets our people get better coached, and it takes away that burden from other people who always seem to do it in the margins. Right? I've got chargeable work, I've got client deadlines, and I can't believe I got to do your review. Okay, well, we'll do that, at 5 o'clock on Friday because I really am not good at it and I don't want to do it. So I'm super excited about it. Sorry, I rambled on.
You did, at least I want you to, because we're here in the town hall, we're going to be doing quarterly segments, maybe more, talking about, coaching and leadership with Alex Dorr. And that's been very well received.
And it's all about creating that culture where your people feel like you are investing in them. You are going to help them grow and develop, because that obviously is going to make them feel more invested in your firm. There are firms who are much smaller than Johns and Omni's who may not have 5 full-time coaches on staff, but they do have programs with professional coaches. And I think the point John made about hiring someone who's not a CPA, or let me rephrase that, their full-time job is something that's not just chargeable hours for the firm, is really going to make a difference, because otherwise it just becomes it's time for that quarterly, let's check that box and drive on. So I think coaching cultures are really going to create a dynamic workforce where your people feel invested and stay.
And I would just add the importance of it in today's world. There's so much opportunity, but really none of us that are in the business world today have experienced the set of facts that we're all dealing with. It is, and that's not a good or bad statement. It's just a true statement. I mean, think about, you're reading the news or hearing the news related to a war on, mainland Europe. We've never really experienced that. Then high interest rates, most in the profession never work through high interest rates. Our inflation the way it is, all of it, you could just go on and on and on. It just is a way to help people get their arms around, and in a world in which they've not previously experienced, that's obviously very complex.
Yeah, we're only 3 months removed from the fall of Silicon Valley Bank. That was a very scary thing.
Yeah.
Who knew if that was going to be the first domino? And it was going to, there were predictions that
Right.
things could get really bad. So there's been so much fear.
And then the pace of it. So you said 3 months ago, it feels like 3 years ago as it relates to the other set of issues that are out there, right? So that's the other part of it.
Well, we're going to move now to open forum. It's been kind of an open forum discussion already. So thank you very much, John and Avni. Lisa, I don't know if there's any questions that you're seeing that are coming in. Section 174, I think we briefly touched on it. Anything you want to expand?
I didn't touch on it, actually.
We didn't, yeah, we are certainly continuing to look for opportunities to get it attached to a vehicle that will move. And that's the problem, as Barry talked about earlier. with what's going on in Congress, you've got to find a legislative vehicle that can get through the system.
And there was a business tax bill that was marked up in committee. It is not going to move, unfortunately. And, that was a place where things like the R&D and the tax credits, it's been held up really because of the SALT issue, but it's really not going to move.
Yeah.
Well, I think we have a few closing items to cover here, but John, Abby, thank you very much for your insights. A lot of positive comments came in from the town hall community. Look forward to having you back sometime.
Well, thanks for having us.
So in summary, plenty covered. Congress is about to begin their August recess. And the big question will be when they come back, will they be able to get a continuing resolution done to fund the government? So a lot of great points that Barry made. Lisa covered the latest from the ERC hearing. We still have, more coming in. Lisa, is there anything else you want to add?
The latest updates are that one of the representatives wants to know whether Congress could help CPAs fighting the ERC promoters. We've been apparently a hot topic in the hearing today, and there's recognition of just the frustration and the challenge that this is presenting for our profession as we deal with these aggressive marketers.
And I just want to add, this isn't from the hearing, but Commissioner Warfel did specifically speak to his understanding of the pressures that CPA tax practitioners faced in this issue because of sort of the big marketing play that was going on. And I complimented him, and you did too, Lisa, on the points about the claims and things of that nature. But he also said that, and I think that was a good recognition of the difficult spot that our members in trying to do the right thing were in all this issue.
Well, thanks. And thanks to our DC team to be feeding this input. That's called breaking news, bringing it to you as it happens. So we also had a great discussion with John and Abney about practitioner strategies, things that firms of all sizes can implement. One thing I was speaking to John about is, we've been saying this for a decade, technology is the great equalizer. Cloud was the great equalizer, allowing firms of all sizes to bring very unique capabilities to their clients. ChatGPT or generative AI is going to be the same thing. This is a great opportunity for small firms. It's a great opportunity for all firms. The key is just to be, progressive in how you think about it.
Can I add, and be curious?
Absolutely.
Don't be afraid.
Right.
Just be curious. And again, let's see where our technology vendors can help.
They're going to help
on that journey.
Yeah, and we'll have some technology vendors on to discuss this in greater detail. And we're working on kind of, AIs, so these are many different webcasts that we have coming up. Some of them are, maybe more specific in kind of what they'll be talking about related to AI. And you need to be careful about that because, people are going to always be put AI now into, whatever they're releasing. So what we have here is we've got a follow-up webcast with Jason Statz related to generative AI. The topic is the great equalizer. And we're going to have a lot of AI-focused sessions at Digital CPA, which is going to be December 3rd to the 6th of this year. So we've got a couple of more town halls this summer. August 10th, we'll have our team from Aon talking about their professional liability strategies. We're also going to have a great talk with Dr. James Johnson from the UNC Business School, who's going to give us some really good insights and a look at what's happening with demographics here in the U.S.
Put a plug in, because if you hear us say we're going to talk demographics on an upcoming town hall, you might want to zone out on that one. Please do yourself a favor. Dr. Johnson will make demographics fun. I promise.
And it's amazing information.
It is amazing information.
There's no zoning out allowed during the town hall. So you've got the town hall series on demand. It's the middle of July. We've got about 8,000 people live with us. I know we'll have a couple of thousand people watching during the week. Here's the next two sessions we have with you, August 10th and August 24th. Thank you very much for being with us today. Thank you to our practitioners. Barry and Lisa, always great to be with you.
Eric, great job. Thank you.
Thank you.
That's all.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.